Hey guys, welcome to the channel Market Uncharted. Today we are going to discuss about short squeeze. I'm going to have a few definitions and then we are going to discuss about what happened this week in the markets. We had a huge David versus Goliath war and we are going to see a little bit. So short selling, short squeeze, and then the Wall Street bets versus Melvin Capital. First of all, short selling. Short selling is an investment or trading strategy that speculates on the decline in a stock or other security's price. Basically, it's when we borrow some stock to sell first in the market, and then when we want to close the position, we repurchase the stocks and we deliver to the lending broker. And this is important because we are betting in the decrease of a price of a stock and not the other way around. Then we have the short squeeze definition, which is basically occurs when a stock or other asset jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses. And this is important because you accumulate the pressure of the buyers versus the closing positions of the short sellers, and that makes a huge spike on the price, as you can see in the graph. And this is the bigger picture. You can understand when there is a breakout on the short selling positions creates the short squeeze, a huge movement in the price, and because this accumulates the buyers versus the closers of the position in the short selling. And these are really important black swan events in the market. Let's just see a previous example. So, Volkswagen in 2008, following the financial crisis, had exactly this movement. As you can see here on the daily chart, this is what happened to the Volkswagen shares. The price went almost to 1,000 euros and then sharply down, coming back all the way what is currently traded now 176 euros. So you can see huge volatility is really dangerous, as I call adult swim only type of traders, not young traders that never invested in the markets before, because it's really dangerous. So now let's talk about Wall Street bets, because this week what we had was a subreddit group that is the David that took a war versus Goliath. And this is really important to understand because this is a group of people that decided to go against the installed powers in Wall Street. But let's just have an idea, a concrete idea of what happened. Basically, you have Citron Research and Melvin Capital. This is hedge funds in the Wall Street that their main business is shorting companies quoted in the S&P 500. So these are Wall Street predators, and basically what they want. And if you look at the tactics, I just watched the show Billions. This is just to have a clear picture. Basically, they create nothing. The only purpose is generate outcome by destroying these companies, and the business model is all around short selling and destruction. So we have these Reddit kids that publish a manifesto, decided to get together and hurt these vulture funds where it hurts their pockets. They create a trade mob of 2.7 million buyers versus this cartel. When the funds double down the shorts on these positions, these kids triple down. And just paraphrasing, why they triple down? Because they said we can remain retards longer than they can remain solvent. Solvent means liquidity of these hedge funds. So basically, after this, they were winning the trade. Melvin and Citron were busted. They needed to ask for funding to stay alive, just stay alive. And these guys, these Wall Street bets, were using stockbrokers such as Robinhood, Webull, and other stockbrokers. And they were investing in these stocks that were on Citron Research of shorts, which was GameStop, Nokia, BlackBerry, Bed Bath & Beyond, Naked, and AMC Theaters. And the war started because it was a huge buyers versus sellers. And the truth is, the Reddit traders had these guys by the ropes. They were winning. But at the moment these funds were going to be bankrupt, Robinhood shuts down the buy side of the trade, enables these guys to continue to buy these shares, giving 24 hours of time for these hedge funds to regroup and recover short selling as they wanted. And on the other side, the little guys, the Reddit traders, could not buy the stocks they wanted. And this was a really huge clash. So far, GameStop increased the price from $20 to $370. And this is happened in a week where we had Apple, Microsoft, Tesla, and Facebook showing their quarterly and on end of the year earnings. We had Johnson & Johnson and Novavax showing the phase 3 vaccine data, and everyone was talking about GameStop. And this is the graph of what happened to GameStop. You can see a huge short squeeze, and this was only in January 19, where you see here the stock going from around roughly $20 to 100. Closing of 29 of January, the truth is the stock price is around 370, which made the short sellers hurt and bleeding a lot of money. And basically it became also GameStop one of the biggest traded companies in the world, with a volume of 20 billion in just one day. So you can see being more traded than Tesla, Apple, Microsoft, etc. And this led also to Citron Research stop making this research about the short reports they usually do. And after 20 years, they decided to stop doing this because they now realize the strength of the people. Also, these WallStreetBets traders went also to Dogecoin, which was a cryptocurrency made to be just for fun. The truth is, look at the graph, you can see also the spike up 697% when these guys believe they should start buying this cryptocurrency. And what's next? Basically, this is not over. This is just the beginning. After all of these talks, after Dogecoin, now they are thinking about investing in SLV, which is the ETF for silver. Because why? They know that we have a lot of banks investing short in this silver. We have the 8 big commercial banks short of 404 million ounces of silver. So it means that every $2.50 that the silver price goes up, they lose 1 billion. So that's the main goal also from these WallStreetBets traders, to bleed out the big banks. And you can see, just for them to say that was of their intention, again, a spike up on the price of silver. And also a huge volume traded. This is the graph of the volume trading in 28th of January, this past week. You can see 1.3 billion traded shares. Also, with all of this commotion between buyers and sellers, the truth is we had billionaires such as Shamat Palihapitiya, also Elon Musk, setting aside and encouraging these Wall Street bets and Reddit traders. And also Elon Musk start defending Bitcoin. He put Bitcoin on his Twitter profile, which also helped Bitcoin price jump 7% in one day. But after all of this, and this is important to understand, the reality is that the stockbrokers made a decision of continue to restrict the buy side possibilities. So now we have the Reddit traders and the WallStreetBet traders trying to buy shares, but in this case, Robinhood only allows to buy this amount of shares. So you can see if I want to buy American Lines, I can only buy one share only. And on the other side, you have the huge hedge funds and the huge investment banks that want to short these trades and wants to short these companies. They have unlimited access to the market. So you can see it's an unfair fight. The house may win, but stick around to see what's going to happen. So thank you guys for watching this video. I hope you like it. Please subscribe our channel for more content. I'm going to put here just a quick video about Shamat Palihapitiya, a call to CNBC, where he defends the investor side, the buy side of this situation. So don't forget, knowledge is not power, knowledge is potential power, execution everything. And just like the markets, we will not rest.
Morning, I woke up after spending all last night in WallStreetBets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made plus my original position. So I'm going to take $500,000 and I'm going to donate to the Barstool Fund for Small Businesses. But I really want to tell you, beyond the 500 grand donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into WallStreetBets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell.